Welcome to this live IG special covering the Bank of England interest rate decision at the top of the hour in 5 minutes' time. Which way will they go? We are as evenly split in terms of the opinion from the markets as I've seen in many meetings, certainly since Mark Carney's been there. There have been times when we've been closer than we've been recently, but the last meeting, in fact the last two meetings, we saw a 7-2 vote to keep interest rates on hold. Now, Jonathan Haskell and Michael Saunders were the two those that voted to cut interest rates with immediate effect at the two previous meetings. Now, this time around, they could be joined by more people. We know that because of some of the anecdotal commentary we've had from Gerten Verleger and also from Silvano Tenreiro. Both of them have suggested that there could well be an opportunity to cut interest rates, but it's Mark Carney's last meeting. Even if those four do come through with an agreement to cut, that leaves 4 on balance, and Mark Carney is the then balancing vote, and it's his last meeting. It's a big question about what he's going to be doing at that last meeting. He has been indicating that there will be some sort of stability in terms of interest rates, so will he keep things on hold? Let's take a look at the markets very briefly before we move on to take a look at what Josh is looking at in terms of some of the market activity. This is sterling against the US dollar. We've got this gradual line of rising support that we've seen. The last 3 days we've seen an intraday part of the candle below this line, but we've seen a pullback, and that's exactly what's happening at the moment. We're currently trading at 130.28 for sterling against the US dollar. So far as the FTSE 100 is concerned, we have seen this big drop today. Now, the declines that we've seen away from here have really been on this global move that we've seen as a result of the coronavirus. And the FTSE mid-cap 250 index, you can see we're receiving support at the moment around where we are from the highs that we had all the way back in June 2018. At 21,371. The record high for this index was only just a couple of weeks ago at 22,114 in the wake of that resounding general election result for Boris Johnson. And that certainty has pulled through into some anecdotal data out overnight from Lloyds Bank, and suggesting that the business community here in London is performing at its best it has been for a number of years. So that's where we are in terms of the setup. We've also seen some strong PMI data out recently. Is that all sufficient for the likes of Gerten Verleger and also Silvano Tenreiro to suggest that interest rates shouldn't move? Josh Mahoney is with us here in the studio. What is it for you that we are seeing here? Because we've got this fine balancing between what the market's expecting. What are we pricing in terms of market activity?
Yeah, I think this is an interesting one. Look, we've come into so many meetings where it feels like a bit of a foregone conclusion. We had the same kind of thing yesterday with the FOMC. This time around, it generally seems to be a coin toss. Certainly, if you're looking in terms of market expectations, really it feels like it's almost 50-50 each way. Yesterday we were talking about 52% market expectation of rate cut. Today 51% of a no change. So certainly markets don't necessarily know where it's going to go, and that means that we're likely to see volatility in any circumstance. Now, in terms of what it could mean down the line, I think personally the way that I see it is economic data, as we've been seeing it gradually after the election period, has started to pick up, most notably the services PMI in the UK. Now, certainly that does point towards a potential for the UK economy to rebound. We had, of course, major Brexit worries, of course, the uncertainty around the election. Now that that appears to have cleared, certainly for the short term at least, you're seeing a potential for the UK economy to start regaining ground. And some of the talk that we have been hearing, you were mentioning some of the dovish commentary that we've heard from some of the members of the MPC. Well, a lot of that has been around the idea that they want to be supportive of this recovery. It's not necessarily a case where the UK economy is going downhill quickly and they really need to act. It's a case that they see a recovery happening, but they want to be supportive of that. Now, with interest rates at 0.75, I don't necessarily think that it's going to be that much more supportive by cutting rates. Nevertheless, of course, we've got the inflation picture, and certainly the fact that today comes alongside the inflation report, so we're going to get forecasts in terms of inflation. That's going to be really crucial. So outlook is going to be really key here, even if we do or don't cut rates. I think this is going to be a really interesting chart. This is the pound against the Japanese yen. The weekly time frame sees you can see some weakness coming into play. Bear in mind the Japanese yen given everything that's happening in terms of China at the moment and with the coronavirus, really that is one of the really big haven plays at the moment. And so you're expecting to see further upside for the yen. If we were to see something dovish coming out of the Bank of England, i.e. a rate cut, then you're going to be looking at the potential for this market to roll over following this rally into trendline resistance. The key level here is going to be 141 for sterling yen at the moment. So.
Okay, all right, we're getting it through now. The situation is that we have interest rates that have been left as they are. We've got I'm just looking at the numbers of people, so what's happening, to cut interest rates. So that's the situation. So that's the same as it has been. Interest rates are being held by the Bank of England. This is the sterling against the US dollar. This is the minute-by-minute chart. If we can bring up this to show you what's happening in terms of money going in to sterling. You remember when we looked at that on the daily chart, I showed you what had happened with that spike lower that we'd had intraday. But underneath that line of rising support that we'd had. Now that was because earlier on today there was that expectation potentially that we could well see an interest rate cut, but that hasn't come to pass. It holds on interest rates. The QE is still at 435 billion. The vote to cut, as I said, was just two. So I'm imagining that's Jonathan Haskell and Michael Saunders. So that just goes to prove that the data that we've had, the PMI data that we've had recently, has persuaded those doves that were hovering around the possibility of cutting interest rates have not come through. I don't know, Josh, have you got any headlines in terms of some of the inflation report data out? Because that could be key as well.
So wage growth they see as around about 3%. That's down from a November forecast of 3.5, so that's negative. Again, a negative is the see GDP growth of 0 quarter on quarter for Q4. The previous forecast was 0.1, so again, that's negative. If we're looking at inflation, they're talking about inflation in 1 year's time at 1.53. That's slightly up from the previous estimates. In terms of the further out readings, probably an interesting one is going to be this 2.15 reading in terms of the 3 years. But ultimately, the further out it goes, the less reliable it's going to be. So not necessarily a major shift in terms of inflation, but in terms of the likes of wage growth and the likes of GDP growth, somewhat weaker. But certainly, you know, the strength that we're seeing here is a testament to the fact that we are ultimately seeing the beginning of what looks like a recovery here for the UK economy. And whether we did see a cut today or whether we see a cut next time around, I don't necessarily think that that's a major deal ultimately. They're trying to be supportive, and I think the overall recovery of the UK economy should be good for the pound, irrespective of whether we see a one-and-done style rate cut.
Okay, let's go back to my chart here. Sterling against the US dollar. We see now we're pretty much to the top of today's activity. We're just breaking the 50-period moving average. If you are long on this one, the news we've had this morning, your stop would go below the underside of this rising line of support down here for sterling. Just to quickly recap again on the minute-by-minute chart, because I think it's important to watch what's happening in terms of the movement. You can see here money going into sterling against the US dollar. Similar sort of situation minute by minute for sterling against the euro. I do want to show you what's happening with the equity markets. Now, operating contrary to this, because the FTSE 100 tend on the whole, the companies here don't like to see a stronger sterling. These are minute moves. I mean, these are only minute candles, and you know, you've got to look back on this chart. This is not a particularly long chart in terms of the move. You've only got to the beginning of today's session here. So we're bouncing off the lows at the moment, but broadly speaking, it is a market which is under a little bit of pressure, but really nothing of major import. This is the daily chart for the FTSE 250. Just to quickly give you an idea, there's what's been happening. Josh was talking about wild volatility. Now, lots of opportunities to trade this potentially. Minute by minute chart again, showing us here at the highs of the day, pretty much all the way up there. But this is trading at 21,396. Your yen chart, I just want to quickly return to that if I can, and talk a little bit about whether or not anything's moved on there. But I mean, you just brought that up as a chart you were watching it when going into this announcement.
Yeah, I think that would have been particularly important if we were moving into a phase where we were seeing a more dovish outlook from the group, and if we saw a cut and a short-term move from the Bank of England, and if we dropped below that 141. We didn't necessarily see that, so we're looking at potential strength here. I think just bringing it back to the FTSE 100, the interesting thing is this wider outlook. We can see that we're now seeing an extension of the weakness that we've seen from, again, this week, but last week as well. And really this comes off this trendline resistance, the continuation of this symmetrical triangle, and the breakdown that we saw there on the daily time frame, we're into the lows of not only the week, but we've hit within this latest sell-off the lowest level in around about a month and a half. So this does point towards further weakness coming into play. Your 61.8 is going to be the next major support level alongside your 200-day SMA. That's at 72, 62, 73, 43. But certainly, like you said, in terms of cable, it does look like a relatively bullish outlook here for the pound for the short term. And that's why I wanted to bring up what's happening in terms of euro sterling, because certainly if we look in terms of the trend for cable, it's not necessarily as clear cut. Recently, we have been seeing some money coming into the dollar. But if you look at this wider perspective for euro sterling, bear in mind this rally that we have been seeing through the back end of 2015 going into 2016, this of course is around about the fact that we saw the decision taken in the first place to leave the EU. Then you look at everything that's happened in between through all of these negotiations, the potential for a breakdown in terms of that relationship and a no-deal Brexit. You're seeing weakness coming into play. Ultimately, we have seen significant strength for the pound against the euro throughout the back end of 2019 through Q4. And in actual fact, despite the fact that we've seen a rally, you can see here we've come into this inside trend line, previous resistance, turn support, again turning resistance once again, and now selling off. So there is a good chance of what we've seen here over the past few years is a topping pattern, and we're now likely to head lower once again as we try and regain some of the ground, or we make up some of the ground that had been seen through that 2016 period in particular. So again, into the daily time frame, how are we building on that? Well, look, we've got this double top formation, the breakdown through 84.50. This does look likely that we're going to see further downside come into play, and what we've just seen really does play into that. You can see again another sort of double top formation within this shorter term 4-hour rally, which again looked like a retracement. This looks likely to head lower for me. So the key level you're going to be looking at towards the downside, 84.08. We break that and we're breaking out of this short-term uptrend that we've been seeing over the past week or so, and it starts pointing towards euro sterling really turning towards the downside in a heavy manner once again.
Okay, just want to show you this, if I can bring up my laptop, because this is a dashboard from the Bank of England website. I'll probably get into trouble for showing this, but I do credit the Bank of England website in this. It's done a really good job actually in producing these little sort of dashboards as to where things are. It acknowledges that growth has slowed in the UK, but if you look down deeper into this, it also says that there are signs that growth is beginning to pick up. And we saw this anecdotally. Inflation no below the 2% target, and in fact we've got 1.3%. We're looking at 1.4% a little bit later on this year. That being said, oil prices are dropping big time at the moment, and that could disturb that target. Now, then of course it says on the far right-hand side, if that doesn't happen, interest rates could fall. Now that's always the case, isn't it? If things don't work out the way you expect them to do, things could turn on a penny, and it could well be the case that the Bank of England is faced with very different situation from the next meeting. And of course the next meeting is different because Mark Carney will no longer be there, and the general voting pattern, or the not voting pattern but the general sweep that has taken over Andrew Bailey is that potentially he could be a dove. Now if that is the case, and that does take a sort of a more negative leaning in terms of the interest rate outlook, it'll be interesting to see just how the future interest rate decisions take place and what goes on. But broadly speaking at the moment, I think it's right to say that the election, the clearance of that has meant that there is a little bit more activity, a bit more growth. The big worry, though, does appear to be inflation.
Yeah, certainly. And I think the other thing that's going to be interesting for whoever follows up Mark Carney is what is their appetite for negative rates, because that's certainly something that we've seen from Mark Carney. He's not necessarily been willing to do that, and that pretty much just draws a line under how much they can actually do in terms of cutting interest rates. And so certainly that's going to be something worth watching for his successor. But yeah, I think inflation is going to be important. Ultimately, we've just seen their downgrading forecast in terms of wage growth, so that should have a material impact in terms of inflation. But by and large, in terms of their expectations, it hasn't necessarily shifted all that much. And like you said, look, oil prices are going to play a key role in that, and that means it has its footing in what's happening in China at the moment, because despite what's happening in Libya, despite the fact that we're seeing potential attacks on Saudi operations, markets at the moment just want to sell into Brent crude and WTI because of the fact that we're seeing the potential for a massive drop-off in terms of Chinese demand. And then the question comes around, should they be looking at core inflation or headline inflation? Because ultimately your interest rates from the Bank of England aren't going to impact the price of oil. So it's something that they can't necessarily change themselves. So whether they actually take a view that they want to change their monetary policy stance off the back of something that's external to them, that kind of remains to be seen.
One thing I want to see from the Bank of England governor at half past the hour when he does the press conference is to what degree the discussion was around the table whether they wanted to hold some ammunition in store. We saw this leading up to the Fed yesterday. There was some suggestion that the Fed wanted, I think actually said that they wanted to keep something aside just in case there was a market downturn. They didn't want to cut interest rates now, they wanted to wait. I think this is part of the argument, doubtless, that's been around the table at the Monetary Policy Committee, and I'll be looking for some indications at the press conference at half past the hour, which you can actually get on the Bank of England website, to see whether or not there is has been any discussion around that, because at 0.75%, there's really not much fat on the bone there in terms of movement. If they had cut by 25 basis points today, that would have left Andrew Bailey with virtually nothing to play with, and that I think is important.
Yeah, certainly. And remember, it wasn't so long ago that the Bank of England said that pretty much in any eventuality post-Brexit, they're going to be raising rates because arguably we could see a significant devaluation in terms of the pound, and that could be ramping up inflation. I guess the difference is that we haven't necessarily seen that. We haven't seen a big sell-off in terms of the pound because we avoided a no-deal Brexit. We haven't seen a big ramp-up in terms of inflation. Ultimately, that is their primary target. So certainly they're going to have to always take into account inflation in terms of what their decision-making is, and they can't necessarily ramp up interest rates as much as they'd like to be able to give themselves that buffer if we don't necessarily see inflation rise and if we don't necessarily see the UK economic picture turn a little bit more rosy. But certainly the initial signs are there in terms of that recovery, and it's early doors yet in terms of the data that we have been seeing. A lot of the December numbers, of course, also reflect that 12 days before the election, so certainly that's been a bit muffled. So when we started seeing the initial PMI number out of the January reading, that looked particularly strong. So really whether that's going to continue building across a number of the different factors in terms of the UK economy, that's going to be really interesting to see just how big that bounce is in the UK economy.
Yeah. Okay, all right, Josh, thanks so much indeed. That just rounds up what we've got for you here. Just to quickly revisit this sterling US dollar chart, because I think it's interesting in as much as there is now this relatively positive activity on the upside. We're being capped out by the 50-period moving average at 130.64, but the long trade certainly working out at the moment there for sterling against the US dollar. Similarly against other currencies, and also a small but only marginal drop for the stock markets, because that's all really about what's happening in the broader picture with the coronavirus spread. There is a WHO meeting today. The World Health Organization is likely to make a statement later on this afternoon. Will it come out and say there is a global emergency? That could put a stop to many more airlines flying to and from China, as we saw yesterday from the British Airways statement. We are back this afternoon at 4 o'clock. With a look to tomorrow's calendar, which is mainly macroeconomic data, and I will be back tomorrow morning at 7:30. One of the things we'll be talking about then to Daily FX is sterling. We'll be looking ahead. It is Brexit day, but in theory, in practice, really nothing happens apart from the fact that those MEPs have effectively lost their job with effect from tomorrow, and the Brexit department closes down. Apart from that, life will carry on as normal until the end of the year. It's really all now a question of waiting for the major news headlines developing around that potential trade deal. But as I say, we're back at 4 o'clock this afternoon with tomorrow's calendar, and I'll see you again tomorrow morning at 7:30 for the early morning call across the IG platform. Hope you can join me then. Have a good day. And thanks to you. Sorry.